that again, we've got a little bit of a wind up suggesting that we're going to go again. So it's getting a little bit busy there, so I don't want to overcrowd the chart. But that's all pointing to the potential of 38.28, but potential overperformance to that, because that's what happened last time. We got one setup. It wasn't quite the right moment. It started its move, but went into a holding pattern and squeezed again. And then it was released and then it overperformed. And it seems like that as well. So it's hurry up, start, relax, wind up some more, and then go. So we're very bullish on silver right now. And I think in percentage terms, that's going to be an outperformance to gold.
Technical analyst Francis Hunt has adjusted his outlook on precious metals, now favoring silver over gold, despite previously expecting the gold-silver ratio to spike higher. His analysis suggests silver's potential percentage gains could significantly exceed gold's projected returns in the current market environment. The fundamental case for silver remains compelling. After record industrial demand in 2024, projections indicate even stronger consumption this year. Market analysts expect silver demand to exceed supply for the fifth consecutive year in 2025, creating persistent supply deficits that could support higher prices. Hunt's projection centers on silver reaching $38.28, while gold moves from around $3,300 to $3,700. While gold's anticipated 12 to 15% increase represents solid gains, Hunt expects silver to deliver substantially higher returns, making it the more attractive option for investors seeking maximum exposure to the upside of the precious metals market. Gold has already demonstrated strength in 2025, reaching new highs as President Trump's tariff policies boost demand for safe havens. Long-term forecasts project gold to average $3,675 per ounce by the fourth quarter of 2025 and to approach $4,000 by mid-2026. However, Hunt's technical analysis suggests silver may outpace these impressive gold gains. Hunt's bullish silver stance is based on 4-hour chart patterns that resemble previous setups that preceded significant periods of overperformance. This technical backdrop, combined with strong fundamentals, reinforces his conviction about silver's superior potential. Current market action supports this view. Silver traded at $36.59 per troy ounce on Thursday, up 0.55% from Wednesday's $36.39 level. The metal has gained 26.63% year-to-date, already demonstrating the kind of outperformance Hunt expects to continue. Before we dive in, don't forget to like and share the video with friends and fellow investors. Subscribe and hit the notification bell to stay updated. Your support keeps this community growing stronger every day.
Let's go have a look at that silver on its own, and I'll come back around at the same time frame and answer more specifically on the gold-silver ratio. I want to highlight a couple of things that happened previously as well, because I think we're getting a little bit of a doubling up event as well. Let's go to the 4-hourly time frame a little bit lower. I'm even more bullish the silver now. So some people will say, but hold on, weren't you the guy that also said the gold-silver ratio could spike higher? Yes, we'll come back to that, and I am that guy. And we'll explain that. But right now, that's not the highest expectation. We had two wind-ups here. One was a fractal of the other. We got part break, and then we overperformed for the target. The target, this was quite low. In fact, these lows were in and around 31s, by the way. So we're doing well. We're working our way up. Some people are, it's not enough gratification. Setups all the way, overperformance to targets, and then there was a degree of exhaustion. What happened is you got a big setup, and then you got a secondary setup. And then once it started to move, you got a fractal, a third, smaller one, that continued to drive us higher. So there's a little bit of similarity here, and I'm going to show you why I say that. So we drop down to the current price behavior a little bit more closely, and I'm going to throw my indicators on to make these things pop a tiny bit more for the untrained eye. So that in itself is a winding up setup that is suggesting $38.28. Remember last time we got an overperformance on the big one with the second helper that came along. We've got a similar situation with a little bit of a helper over here as well. Again, it might not pop for the untrained eye, so I'm just going to highlight it, but you're in there. So you sometimes have initially a slow start and you wind up again. Now, we maybe just didn't get the right data about unemployment or something else and wanted to go, but it was a bit of a hard sell into the wrong kind of news. So it coils a second time on a smaller time frame. So we've got that happening, and I'm going to put together again the indicator on that, and I'm going to stick it on there, and you will see that again we've got a little bit of a wind up suggesting that we're going to go again. So it's getting a little bit busy there, so I don't want to overcrowd the chart, but that's all pointing to the potential of 38.28, but potential overperformance to that, because that's what happened last time. We got one setup, it wasn't quite the right moment, it started its move but went into a holding pattern and squeezed again, and then it was released and then it overperformed, and it seems like that as well. So it's hurry up, start, relax, wind up some more, and then go. And I'll just point this out as an interesting repetition, like a sort of a mini cycle repetition. And so we're very bullish on silver right now, and I think in percentage terms that's going to be an outperformance to gold. Gold going from roughly where it is around the 3,300s right this minute, going to 3,700, let's say. That's about $400 on a 3.3. $300 would be about an 11th, so it's a little bit more. It's about 15-20%. I would imagine that we'll beat that on the silver here, and we could also be beating it on the platinum. That's almost the contest actually for the outperformer for me, those two at the moment. But you need the king, the old aging king, to get up from his table first and move. So we're very dependent on gold going up. If the gold pattern fails or extends a little longer, all of this will be also put on ice again for a while. So please understand, it's a bit like the altcoins can't go up if Bitcoin doesn't. Only gold is the original and silver is the original follower. So they need both.
Technical analyst Francis Hunt identifies bullish momentum building in gold through gap formations that historically precede sharp breakouts. Hunt notes that these gaps create momentum before key levels, often triggering breakouts followed by pullbacks, with the current setup suggesting a brief dip before the next upward move. Gold rose to around $3,330 per ounce Friday, marking its third consecutive session of gains amid escalating trade tensions. President Trump's announcement of a 35% tariff on Canadian imports starting August 1st, along with plans for 15 to 20% blanket tariffs on most trading partners, has intensified safe haven demand for the precious metal. Despite a brief pullback, gold maintained its upward trajectory driven by what market participants describe as tariff tantrums. The metal advanced toward the next psychological level at $3,500, which Hunt characterizes as the logical midpoint between $3,000 and $4,000. Major Wall Street institutions are projecting continued strength in gold prices. Goldman Sachs, JP Morgan, and other analysts forecast that gold will reach $4,000 by mid-2026, representing a rapid ascent just 15 months after it hit $3,000 in March. This timeline is particularly notable given that gold first closed above $2,000 in April 2023, according to FactSet data. Let's get back to the interview.
I suppose for the precious metals fans, I'm really excited about this current move at the moment, and it's sometimes best explained with the chart, so I'll maybe go straight there because I can walk you through it. And I can say to you, we made 3,500. Let me get that share screen up and running. Some folk have been a little bit impatient because, we kind of made 3,500. You may recall, Elijah, we were with you on show, and when we were on a 2,000 point, and we pointed out there's an HVF structure just sitting on top of the 2,000. The low was about $2,011, and we said next stop 3,000. That was a big move. It was a breakout. We said once, twice, three times a lady. We showed you that technically, and we made that 3,000. We had a little bit of pullback, but actually we continued. We had the tariff tantrums, and actually we got a second surge that took us to the logical next round number that sits between 3,000 and 4,000, and that was the 3,500. So that is a touch just at the 3,500 level after passing the 3,000, which is somewhere down here. So there's a bit of fiat news for you, but in the end, gold wins, and this move is looking for 3,700, 3,750. So between 3.5 and 4,000, the next logical level, and this has derivatives and pegging as part and parcel of this, and you tend to have sort of orders stack in a bid stack around round numbers. That means you tend to get vacuum vacuums. If instead of everything being evenly distributed, you tend to get vacuums just before logical round numbers, and then many more orders stacked at the round numbers. And we call that voids and vacuums. And that sees you move very fast, and you make the same profit when you cover a $10 move, whether it's $10 between 69, 3,669 and 3,679 versus 3,690 to 3,700 or 3,740 to 3,750. It's still $10, but you will get different degrees of stacking in depth across it's not evenly distributed, and you tend to get very quick moves in the numbers before round numbers, and it builds momentum, and then it often shoots through, and then it pulls back through the round number. So our expectation is there's a 370 run in this setup. This setup isn't necessarily complete, and I think it can come a little bit down, but I don't see it coming all the way down. I think buy limit orders in a box round here for investment gold would certainly be a great entry, and we are actually taking a trade on that, which we expect. We're not day traders. We'd expect the entry to occur midweek next week in and around that pink box level, and then we'd expect to see a 3750 run. Don't forget, you'll be buying below 3295 if we're correct, below the 3300 mark. Look to accumulate. I'd probably place stops initially at the secondary low, so that's why I've pre-positioned this risk-reward profile for those that like a trade. Remember, non-advisory. We take ownership for our own outcomes. This is not advice. It's just talking about what I intend to do, and in part process already am doing. So that's a target. By the way, if that was the final low, that stop would go up to there, and that increases your reward and buys us the right to add further as we break the green line. So if I'm allowed $1,000 risk, and it was $1,000 risk at that deeper stop to there, and I now reduce that, I've bought the right to wait up to maintain myself at that $1,000 risk if that is run. So that allows you to get fairly big, and then that will give you a very spectacular 25.9. Of course, if you're adding and it's trading up, your average entry won't still be down here. It'll go up a little bit, so it won't be the full 25 RRR. But that's how I manufacture a trade. That's what we do in the marketsniper.com in our community with Method. These squeezes are rare opportunities for tight risk and asymmetric reward. Let's say you're not a trader. This is all just too technical for you. It's a great time to buy investment gold right now, in my opinion, and capture the prices here, and through the next few days into midweek might come off a tiny bit. My expectation is you're going to be taking the next big peg levels in those derivatives. It's called pegging because of derived markets on those round numbers, and I think it's north of 37, potentially 3750. So gold, very positive.
The traditional role of precious metals as a store of value is being reinforced amid rising economic uncertainty and geopolitical tension, creating what many analysts call a perfect storm for sustained price growth. Gold continues to show strong upward momentum, supported by key technical formations and psychological price levels that reinforce a bullish outlook. In this environment, short positions appear increasingly unjustified. Silver is displaying similar strength, with technical patterns indicating the potential for even greater percentage gains. As both metals build bullish setups, the current trend favors continued accumulation, with gold likely to lead and silver poised to outperform as momentum accelerates. Is gold setting the stage for a major breakout that could drive the next big move in precious metals? Share your thoughts in the comments. If you enjoyed this video, don't forget to like, share, and subscribe. Hit the bell icon and turn on notifications so you never miss an update. Your support helps us keep delivering the latest market insights to you and the entire community. Thank you for tuning in.